is a creditor exemption risk coverage. So not only are the assets protected, but all the accumulation and the earnings are protected against a loss of assets and creditor risk. Now, I want to read this to you because this is current and this is now reinsured by an A+ carrier. Loss of creditor exemption rights. So this is the actual provision. This coverage will reimburse the certificate holder for direct loss of asset value, earnings, or litigation costs incurred against a certificate holder in the event of a loss of a creditor exemption lawsuit. Creditor exemption loss includes any loss of exemption benefits, state or federal, where a claimed creditor exemption within a private retirement plan or even a qualified retirement plan is not upheld, and the certificate holder loses assets, values, earnings, and other costs associated with the claim of a creditor from bankruptcy or non-bankruptcy situations and lawsuits. Now remember, in California, we have two systems. One's bankruptcy, one's non-bankruptcy. So again, there's some specifics there that most people aren't aware of. There's some criteria. The losses need to be reported, just like you would in a regular casualty. They're covered only if reported within 120 days and the date of the notified lawsuit. So this is extremely, I get so excited, I get beside myself. I shared with Jeff Verdon and one of our new partners, Harry Barth, that this is the most potent thing I've seen in my 30 years, is we actually have an asset protection plan that actually has insurance coverage for loss. And that doesn't exist. Why? Because it's really not asset protection. It's a retirement plan that's claiming an exemption right, and it's fortified. So this is extremely potent. There is a criteria that needs to be noted, that this is only if it's administered by TRUST-CFO. Why? Because we had to go to the carrier and we had to prove our success rate and our validation that we only fund appropriate amount of assets that we can quantify. And that's why they're willing to put their stamp or marker on this, is because we have a high success rate. Okay, so that again is kind of the culmination of the excitement level, at least that I get into. Let's recap the Accelerator. It secures against proprietary insurance for real business revenue risks. And again, revenue risk is important to notate versus liability and casualty, or excuse me, liability and other risks. It creates a very large tax deduction against all forms of taxation. I want to stop here. We had a client at the end of last year that had sold her franchises for about between $4 and $5 million. I think it was $4.5 million. She had already sold them. She triggered it. And we took the capital and we funded the capital from the proceeds into a private retirement plan because they were already in the LLC by which she sold the assets. So she just converted the hard asset, the franchise interest, into cash. The tax hadn't been paid yet, but we now have a major risk because she's taken that money, investing it into new franchises. So we actually funded $1,250,000 risk reserve in the Accelerator, and we wiped out and checked against a capital gains tax against those proceeds that she had already received. That is extremely intense planning and a very powerful planning. And so again, an example of some three-dimensional thinking on that. Lastly, it uses extremely low-cost financing and arbitrages business cash flows and returns. That's what your client's always going to see in everything we're doing. The people that we're looking to protect, I'm about to talk about the optimization of the client. They come to people and they say, solve my problem, but I want to be in my business because I'm a control freak and I want to run my world my way. And every time somebody in the investment world or somewhere else says, well, I can fix that problem, but you got to go move that capital into my bucket, now you've got resistance. This is the way that you can accomplish both. Solve the problem and let the clients build their world their way. That's our mantra.